Thank you very much to all of you again for being here. I am now going to introduce our first panel on innovation, named Technology Platforms Enabling MFIs to Broaden Impact. It's my honor to introduce our moderator, Professor Suresh Sundaresan, Chase Manhattan Bank Professor of Economics and Finance at Columbia Business School. And our speakers that will be presented in due time, Simona Haiduc, VP of International Business Development at Opportunity International, Alberto Jimenez, Director, Global Mobile Solutions, Citigroup, Laura Shen, Global Product Manager, Mobile Solutions Global Transaction Services at Citigroup, Kyle Meade, Global Head of Implementations, Entrepreneurial Finance Lab, and Gabriel Francis, a Kiva Fellow. Thank you.
Well, let me welcome you to this panel. We have a very accomplished set of panel members with us today, and we are very anxious to hear from them. So I'm not going to make a very lengthy introduction of each of the members, and I'm sure they can take a minute to describe their activities and their background. But I do want to preface this panel with one calculation that I did with my students in a course that I taught this term called Markets for the Poor. And that calculation was this. Supposing you're a poor woman, you start borrowing $150, which is the average loan balance of a South Asian woman borrowing in microfinance, and you successfully repay every year, and your interest rate is 25%, and every time you repay, your loan is doubled. How many years does it take for you to achieve a consumption level of $2 a day? So we did this calculation. It turned out to be about 7 years. Okay, I want to put that perspective when we discuss technology, because what is the problem? If 25% is the sort of the interest rate that these women have to pay, and about 80% of that is operating costs, right? How do we bring down that operating cost in order to bring down the interest rate, which will obviously diminish the number of years that it would take for an average woman to reach that $2 a day benchmark that World Bank has set aside as declaring a particular person being poor. So in this context, I'm really excited to have these panel members with us today, because I do believe that it is a technology that has the potential to bring down the interest rates in this part of the economy. So without much ado, I'm going to allow each panel member to introduce themselves and describe to us what they do. So let me start with Simona.
Sure. Thank you very much. I want to start by just saying a big thank you for being invited here today, and really the great honor of speaking at Columbia today. With everything in life, timing for me was very important, and at some point 10 years ago I had to make the decision whether I would go to a graduate school here in New York or somewhere else, and I ended up going to NYU, not Columbia, but I have high respect and huge admiration for Columbia University. I am with Opportunity International. I've been with this great global microfinance institution for a little bit over 10 years now. I currently serve as the Vice President of International Business Development, but I've served in a number of different roles with Opportunity. I started as an intern right after graduate school, right after NYU, and I'm based in Chicago. But I'm originally from Romania, as most probably my accent already gave me away. And I worked in the microfinance field in Romania for a few years before I moved to the United States to go to attend my graduate studies. So deeply committed to this work and to this field, and I'm really excited to be here today to share with you a little bit about what Opportunity International is, what we do, what motivates us, our deep commitment to serve the poorest of the poor communities around the world, and the technology innovations and the technology, the key role that technology plays for us in reaching to these communities. Opportunity International is a global microfinance organization serving clients in 20 countries around the world through 35 MFIs. Our client focus and commitment to scale, and I know that Alex talked about scale and numbers and how sometimes we get into this game of just counting and making sure that we get to the large numbers and to the and the MFI sometimes get into that trap. However, at Opportunity, we are committed to scale. We are committed to go to that next frontier, to reach that last community, last village, last poor person in the countries that we serve. We are so our commitment to our clients and to scale led us to deploy a commercial model. We build, own, and operate banks for the poor in the majority of the countries where we are. And that's because we wanted to be able to offer a full range of financial services to the poor. We wanted to be able to offer loans, but also savings and insurance. And Opportunity is also embedding training into all the product offerings that we do. So we currently serve over 2.7 million loan clients, over 1 million savings clients, and over 3.7 million insurance clients, as we've recently been able to deploy cell phone insurance. And I'm going to talk about that a little bit later. So our commitment is really, as I said, to serve at the bottom of the pyramid, to serve the poor who live on less than $2 a day. And as you might know, these people live in rural communities. 70% of the poor people live in rural communities. And these are communities that are very remote, marginalized, and therefore very hard to reach through the just regular brick and mortar type of delivery channels, like the typical branch or satellite branch. And this is where technology comes in and plays a really significant role for Opportunity International in our pursuit to bring access to financial services, but also drive the cost of delivery down for the bank and ultimately for our clients. So I think that the best way to really talk about technology and the type of technologies that we've been able to deploy would be to use the example of Malawi. I just want to take this to a very specific application that we did. So Malawi is a country of 15 million people, highly densely populated country, and one of the poorest countries in the world. 160, ranking 160 of 180 countries. So when we looked at Malawi and when we wanted to develop our strategy for Malawi, we take a long, hard look and we thought about what would it take to bring access to the poor people in Malawi to financial services within 60-minute walk or ride from their homes. So we really wanted to bring that access as closely as possible to their homes. So that became our 60-minute business strategy. And we started to dream, okay, is this possible through just develop a deployment of brick and mortar? No, it's not possible. And that's where we introduced biometric cards to all of our clients. We've introduced this technology so that our clients would have immediate access to their funds, to their bank accounts. And as you can imagine, these are very poor clients who most of them, they didn't have any form of identification. Most of them are illiterate people. So the biometrics technology was really, really key to bring access to these people, to bring them in and allow them to actually have a form or be able to open a bank account. We then said, okay, we need to bring the bank closer to our clients, and we started to roll out mobile vans. These are mobile trucks that are really designed with our logos and brand, and they go to the rural communities on set days, typically on market days. And basically, people in these rural communities don't now have to travel to the closest branch or to the closest location where we have our bank premises. They became very soon a branding tool for us, because these are vehicles that travel around and people get to see and wonder what is this. And so we have wonderful stories about people getting access and being really thankful for this opportunity. Then we developed agreements with agricultural supply stores in rural communities and petrol stations and other retailers, so that clients could now have access to their cash and to their and make payments in their rural communities. So if you can imagine a teacher maybe getting her salary from the government, she doesn't now have to travel to the closest town to get access to her cash. She can go to the local store and use her card at the POS machine that's in the rural store and get access to cash. But maybe the innovation that allowed us to really think even bigger and come even closer is the cell phone banking and really the advent of cell phone banking and this technology now being available, so that we could now dream and say our 60-minute strategy now became the 1K strategy, because really cell phone banking has allowed us to bring financial services to 1 kilometer within the reach of our clients. I'm done. I'm out of time, but I wanted to say that we've tried three different cell phone banking models. One is the bank-led solution that we're using in Malawi, where we developed the technology and we're linking to the cell phone providers, regardless of the cell phone provider. The second one is just linking to M-Pesa, and so it's the telco-led. And then in Ghana, we're doing the hybrid. We're combining the two. So,
Simona, thank you very much. Sorry that we are such tough
absolutely.
timekeepers.
No, that's
everybody
perfect.
should have a chance to present,
Absolutely.
and then you will get a chance again to come back to some of the unfinished business.
Sure.
Alberto.
Thank you. So, first of all, thank you very much to the organizers for having us. My name is Alberto Jimenez. I am originally from Colombia, but I have been here in the US for 10 years. I used to work in IBM, where I had the opportunity to get involved in microfinance. In IBM, we contributed to MIFOS, the Grain Foundation Initiative, and we also established a microfinance processing hub in Peru, and that is today in operation. Now, for the last year, I've been in Citigroup. I am director of mobile solution and of mobile solutions, and what that means is that I manage a portfolio of mobile wallets globally, and I guess this word mobile wallets, I'll kind of start with that and then kind of connect the content to the panel, to the topic of the panel. But mobile wallets is this term that in our view is used in in two different ways, but many people don't understand the difference. So we have an internal taxonomy that we try to explain when we not only when we talk about it, but also when we define our execution strategies around mobile wallets. The first wallet is kind of an analogy of our physical wallet, our leather wallet. And that is basically a place where multiple payments instruments coexist. They can be issued by multiple banks. And that's kind of the view of the developed world, where we here in New York have access or bank accounts and relationships with financial institutions. So that's one, and I'm not going to talk about that one. The second one is a much more simple concept, which is kind of a stored value account. A stored value account that is accessible through a very simple device and can be used to hold electronic value. That type of wallet is one that can receive and send money. And that's the one that we think is going to be relevant, at least in the short term, in emerging markets and the one I'm going to talk to you about today. In terms of the things that we do, we're very active in the space. Last year we announced something called Transfer, which is a $50 million joint venture with América Móvil, the largest mobile network operator in Latin America. We are going to deploy mobile wallets across 18 markets with them. Actually, last week we launched the first market, that is Mexico. To give you an idea, a third of the 230 million América Móvil subscribers in the region actually don't have access to formal financial services, are unbanked. Our expectation is that we can reach 35 million customers in the next 3 years in this project, and we expect that most of those customers are not Citibank customers, but are people that today don't have access to a financial institution directly. So I think we are firm believers in open ecosystems. So this project will be an open ecosystem. Other banks and other telcos can join. We believe in the power of someone being able to interact commercially with anyone, not only the people that belong to their bank or belong to their mobile network operator. And then how I'm going to try to connect that, which we think is an important piece of financial inclusion. At least in some markets, we believe it's going to be an important piece of financial inclusion. Many would argue that, well, actually enabling electronic transfers is not the same as banking people. Not necessarily people actually will get access to credit or savings product because of they have the opportunity to transfer money in an electronic form. And that is true certainly in places like in Kenya, in M-Pesa, and in other places where mobile money transfers are popular. But we believe that actually once a person perceives their mobile device as a transactional mechanism, a place where money can be stored, where money can be sent or received, a place where they can a tool that can be used to send money or to receive money, we believe that client becomes significantly less expensive to serve by a traditional retail banking service or microfinance service. So once that person is kind of used to the tool, he or she becomes significantly less expensive to serve. And there are examples of this, and I think we're very optimistic about the future in that sense. In Kenya, of course, many of you know, there are microfinance institutions that today only exist on top of M-Pesa. They don't have branches. They do all their collections and disbursements via these devices. So we think that while M-Pesa didn't directly enable that, it certainly opened that opportunity for more specialized kind of entities that are focused on providing credit and savings and insurance products. So that's basically kind of how we think about it. I guess Citi is doing many other things in microfinance, but that's kind of what our organization does. I guess talking, and again, I also think it's important to understand that payments is actually a very powerful tool to drive adoption. I think it has been proven that trying to drive adoption with core or traditional banking products is much more challenging. If you want to drive a mobile, mobile money adoption using savings and credit and insurance, that is more difficult, at least at the beginning. We believe that payments actually has the ability to do that. So I guess that's that. And the last thing I would say is that, I'm going to try to be brief, and the last thing that I would say is that we also recognize that while there is a lot of front-end type of technology innovation in microfinance, things like, of course, branchless banking, mobile banking, mobile branches, and so on, I think it is also important to recognize the technology innovation at the back end, right? So many of these entities, many of these microfinance institutions, and based on my experience in IBM, we realized that they didn't have the correct back office systems. And while probably the other one, the front end, gets a lot more attention, that is basically the base to have something in the front end. So we strongly believe that other type of back office innovation is probably as important as the front end innovation of mobile. So that's it.
Thank you very much. Laura?
Hi, I'm Laura Shen. I work in mobile solutions with Alberto. I work on the product management side. Prior to that, I was in Citi's Global Remittances Group, and before that, I worked in Kenya doing research with Professor Billy Jack and Tabneet Suri on the economics of M-Pesa. I guess how to kind of structure my talk, I'll talk a little bit about specific product extensions that Citi's working on, and then go into the mobile implications of that for MFIs and financial inclusion. So for transaction services, we work on the institutional level. So we work with corporates, NGOs, MFIs, and government entities. So at this point, we've really realized the ubiquity of mobile phones. It's really forced us as a bank and financial institution to reassess how we do business. At this point, nearly 80% of the world has access to a cell phone, and in some parts, only 20% have access to a bank account. So how can we drive financial inclusion through technology there? So we've really seen the evolving nature of mobile, and we've created a solution in Kenya that's live that helps our clients pay and collect money more efficiently through the mobile channel. At Citi, as Alberto said, we see mobile as a catalyst for economic development and delivering solutions that are quick and secure for our clients. So in Kenya, we went out and we looked at our institutional clients. You said, what are the challenges you're facing with your current distribution mechanisms? A lot of times in Kenya, it's going to be a cash-based society or check, or at some point for our clients, it was direct deposits into bank accounts. So for them, it was the high cost of handling cash, both distribution network and also security. There's the cumbersome paperwork that went along with it, and the reconciliation nightmares when it comes to tracking the collection and disbursement of funds. So we, on our corporate banking platform, Citi Direct Online Banking, created a functionality that allows our clients to distribute funds via mobile wallet. So just as you include a client's bank account number for direct deposit or an address to send a check, they can now put a beneficiary's mobile phone number as an option. So that's really, and it's a one-stop shop. For us, our clients are happier because they have one solution that gives you the internal tracking and actual payment mechanism, and you get a response right away when the payment or collection's been received. So you have that speed and efficiency that you weren't seeing with cash when it would take days to deliver and you weren't seeing the confirmation. There's also just the operational efficiency of now you have this portal in which to keep your records, for internal and audit purposes. So that's really been a great step in the right direction. I mean, at this point, Kenya's been the only realistic market in the scalability of it for our institutional clients, but we're looking to expand that as we see mobile wallets and mobile money take off in more countries. And so that's really what Citi's doing right now in terms of how we integrate with microfinance institutions. But I think what mobile technology can do for microfinance institutions is really incredible. As Alberto pointed out, there's some microfinance organizations that only operate on a mobile network. So Musoni in Kenya only works on mobile, so no branches, completely cashless. And for them, they're able to provide their customers cost savings, lower interest rates, because there's a study done by Oliver Wyman and Planet that looks at, what's the impact of mobile for MFIs. And so they're able to find that operational costs were reduced by about 50% through using the mobile channel, because you're not having agents going out and collecting, and you're having that reporting in-house. They also found that they're able to reach more people. So their distribution networks grew 5 to 8 times larger than just using agents and going that route. There are going to be pros and cons to using a completely mobile MFI network. You're not going to have the face-to-face contact that you would using agents to go collect funds. And I think you miss that relationship part, but you can also make up for it in the way that mobile is a communication network. So you can, I know there's MFIs that are using SMS text messaging to check in and make sure that you're not defaulting, because that person-to-person contact was able to avoid some of the default risk that you had. And I guess to move on to how mobile can provide that impact for financial inclusion, not just for MFIs, but in a greater sense. Mobile's not just for microfinance in terms of savings, credits, and insurance. It's also a way there's M-Health initiatives, there's agricultural initiatives, so there's really a channel to really expand there. And as Alberto was talking about in terms of, it's not about necessarily having a bank account. It's about reaching people through an electronic financial tool. And I think it was really interesting information that Billy Jack was able to relay at the beginning of April in terms of how M-Pesa has really been able to affect the unbanked populations. So they did a survey for 4 years since launch in 2007, looking at the same households and how the number of banked and unbanked populations using M-Pesa. So in 2008, when they first went out and did the study, 50% of the people who used 50% of the banked population used M-Pesa. At that point in time, only 20% of the unbanked population was using M-Pesa. In the last round of surveys they did in 2011, they found that now 75% of those unbanked populations are now using M-Pesa, while the banked population has risen to 96. But I think that's a huge rise in the percentage of unbanked that are able to benefit from this electronic financial tool. And I think there are a lot of intangibles that are associated with it. They're not waiting in line to go pay their electricity bills. They're able to make those person-to-person transfers and have M-Pesa as a stored value account. So I think going forward, mobile has huge potential to really change how financial inclusion and how banks go about their business. It's going to be, at this point, mobile phones are ubiquitous, but not really mobile money. So I think it's up to banks, telcos, regulators to really work together to try to gain scale, because Kenya's the great example of what mobile money can do, but I think we really have to work together to expand that and scale it up in the remaining countries. Thank you.
Thank you.
Thank you.
Let's go to Kyle.
Okay, so I'm the one who's going to do the PowerPoint today. Hopefully it won't be too boring. My name's Kyle Mead. I'm from the Entrepreneurial Finance Lab. Kind of give you a brief overview of EFL because most people are not familiar with us. We were a research group at Harvard University for about 5 years. We privatized our research 2 years ago. Since then, we were named by the G20 as one of the most innovative solutions for unlocking finance to the unbanked, for SMEs particularly. Originally, our research, when we kind of were going around the world, building up some research on credit scoring, we had about 3,000 data points. So since we incorporated 2 years ago, we're now at 27,000 data points. So we scaled pretty large in the last few years. We're also now in 18 countries, and I believe it's now 15 languages. So basically, one of the challenges that was just set out was, how do we decrease operating costs? So I can't speak too much to operating costs, but I can speak to the cost of credit. Cost of credit is incredibly high. Banks don't really know who to give a loan to. And if you're talking about, loans of $100 to say $30,000, you're not going to really want to spend that much time to get to know that individual. You need a quick solution for these individuals to say yes, no, yes, no. It's got to be, it's a factory. It's not, let's take some time, go golf, get to know you. It's not about that. This is strictly about a yes, no decision. In North America and the Western world, we have FICO scores. Everyone here knows what their score is, and they know how that relates to them when they go to the bank and apply for a loan. That's what the bank cares about. They're not really, interested in too much else. In developing worlds, that doesn't exist. So that's a huge problem. So kind of what you can do is, you can ask them for, an audited financial statement. You're not going to get that in, Bangladesh or wherever you are. You're not going to get, a business plan. And if you do get a business plan, I can guarantee it's pretty much, there's a store down the street that's going to create these business plans for you. And that's right out of South Africa. There's quite the business plan infrastructure there. And also, it's really perceived as being high risk. We talk about how banks are going to lend to these individuals. If everyone is kind of put in the same group, it's perceived as very high risk individuals, high cost, and unexploited opportunity. So what we said at EFL was, okay, we talked to banks around the world. Everyone says there's money to lend to these individuals. Bankers in developing countries, they know how to do the corporate loans, and they know how to do retail banking for government employees. And that's what they do really well. But they also have all this large, all these liabilities are stacking up on their balance sheet, and they need to start to lend these out. So they're looking for new opportunities. So the money's there. Then when we talk to, you talk to entrepreneurs in developing countries, and they'll say, of course we want money. That's our biggest hurdle is money. So what we were kind of brainstorming this problem. We said, okay, the money's there, the people are there. Why is this not happening? And it all comes down to, what tools are out there to help, bridge the information gap. So what we kind of thought about this a little bit, and we said, okay, there's no backwards information. There's no credit bureaus in these countries. Okay, what else can we start to look at? So we looked around kind of, different areas that might have a similar problem. One of the kind of industries that's been operating since the 1970s is psychometric analysis for HR employment. Now, if you think about, if you're coming in for a job interview and someone puts you through a psychometric screening, it's very similar to you're coming in for a loan application. So we said, okay, possibly this works. Let's go around, take 11 different tests from around the world that's, proven to have some sort of reliability, predictive power for entrepreneurship. That was our original research goal at Harvard. After 3,000 data points, we eliminated about 6 of those tests because they had absolutely no predictive power. We're down to 5, and it's about a 30 to 40 minute test. The big part about this, it allows banks to scale lending and kind of have that yes/no decision right away. So I know kind of there's a lot of skeptical faces because this is kind of a new concept, so I'll help kind of explain what we're looking at. I mean, if you're a loan officer or a venture capitalist, these are types of characteristics that you look for when you talk to individuals. So ethics and honesty. So this is actually a really interesting one that we get asked a lot about. One thing about kind of an honest individual, they perceive themselves as being honest in an honest world. A dishonest person justifies being dishonest by being dishonest in a dishonest world. So the way these tools work is they start asking questions about your macro view and then start to ask questions about your micro view. Another big one is intelligence. So there's some research done by some individuals at the World Bank that went to Sri Lanka. And they basically said, we need a quick way to use a test to measure, individuals' ability to increase a loan, to make it profitable for them. So there's this test out there that's called the digit span test. And it's basically, I show you a digit for 5 seconds, I take it away for 5 seconds, you repeat it. What the individuals at the World Bank found was that the top, I believe, 10% performers on that test, they returned about 40% on $100 a month later. So we incorporated that into our test. to see if there was anything else. Attitudes and beliefs. So this could be locus of control. So someone with an internal locus of control would say, my business is going to be successful because I worked really hard. But someone with an external locus of control is someone who will say, my business failed because, the macroeconomic conditions or this government was really bad. So we kind of look for those attitudes. So how does this work? It's about a 230 question application, and it's administered on a tablet touchscreen laptop. One of the biggest hurdles we found working in, it was actually Kenya where I had this situation. We're using regular computers with a mouse, and we asked this lady to kind of move the mouse over here on the screen, and she picked up the mouse and put it on the screen. So one thing we found was that was pretty much our largest barrier. So we overcame that by using touchscreen laptops. Questions are dynamic. One other question we get a lot is it gameable? So you can imagine there's 230 questions. It's very similar. If you're applying for a job, you have just the same incentive to try to cheat the system as if you're applying for a bank loan. This isn't like, we're not reinventing the wheel here. We're just using a very similar concept for a new approach. So kind of give you some ideas of what the questions are. And the really important thing about this, this is all forward-looking information. This does not require anyone to have ever banked before. So what other people's opinions are not important. True or false. Now what this does is you'll see, I think we programmed this right. So after each time series of questions, we can start to statistically link default to the way they're answering questions. Just the same way as if you filled out an application scorecard at a bank, they have some sort of calculation in the background saying you answered this way, you're more likely to default. That's all we're doing here. So we'll continue. A big part of success is luck. True or false? They answer false, more defaulters appear. This is not absolutely true. This is just, so don't link this together. Remember this number for 5 seconds. So you cast this number, it disappears, they are asked to input the number again, and so forth. And we pick up more and more defaulters. Over time, we kind of get a graph like this, where we know that individuals are more likely to default when they answer certain questions. And what this allows for a bank to do is then take a credit score and make a decision. They can, then they can get really creative with how they make decisions. If you score a 650, you can cap that at, 1 million kwacha, where if you score, 550, you can still get that loan, but you're going to be capped at a maximum loan value of, 500,000 kwacha. The other really important thing, as I'm talking about send limits, we do not do the affordability analysis for our partners. So it's still up to our partners to determine how much that person can afford. One quick example of kind of the numbers that we've been working with. We partnered with the largest bank in Africa, Standard Bank. Basically, we ran a champion challenger test where they had a credit system already in place, and they said, okay, if the individual scores a yes from the bank's credit system, they get the loan. They score a yes from our system, they get the loan. They score a no from the bank, but a yes with EFL, they get the loan. And they score a no from EFL and a yes from the bank, they get the loan as well. The really important number here, so it's all about this kind of, when EFL said yes and the bank said no, it was a 9.7% probability default. We were targeting around 20%. So we let down to learn as much about the market as possible, and it was actually a lot better performing than what we anticipate. But the important thing here, it's the number of individuals that fell in that bucket. So it was 3 times. We increased their portfolio by 3 times. And just to kind of give some dollar values to what that meant, it was about $8 million were in that section, and about the average loan size there was about 4,000. So there's a large opportunity in what the bank was saying no, getting told no. So can I quickly say 4 points? We were talking about back-end innovations, process flow tools, biometrics, one GPS verified client location. If you're in the back end and you're asked to go collect or look at, collections piece, and the client, one of our banks had this. Take a right at the Safaricom sign, left at the Big Rock, walk 15 meters, turn left at Luke's shop, 200 meters on the right. Your collections department is not going to find that guy. That's everything.
Thank you, Kyle. Let's go to Gabriel.
Thank you. Well, thanks, Kyle. I actually can really relate to that, those level of directions, because I was a Kiva Fellow in Costa Rica, and in Costa Rica there are no street names, or anything more than like a city name is rarely used. So you'll say like, go to San Isidro de whatever, go to the church in the center, walk 500 meters west, look for the pharmacy that used to be owned by so-and-so, ask the new owner where to find this guy, and then you'd be off to find your borrower. So I experienced a lot of this kind of situations. It's pretty cool. GPS is a great idea. So I'm curious, before I start, who is familiar with Kiva here? And I'm sure a lot of you are, I guess, but I'm looking for people who aren't raising their hands particularly, because I want to know how much I should explain. Is there anyone here maybe who doesn't know a lot about Kiva or would just like a brief introduction to it? Okay, I'll spend a few more sentences on that then. So Kiva is an organization whose goal is to connect connect people through lending to alleviate poverty. And I'll kind of preface an introduction to it with my own story. If any of you have ever met Jessica Jackley, who's one of the founders of Kiva, you'll know she's really fond of giving stories. She's a natural storyteller. It's really wonderful. So I studied computer science and economics in Southern California. And shortly after graduating, I got a call from Google, where I currently work, and they asked me to come work for them in Mountain View. Being a recent college grad and zero money and really no idea what I was doing in Northern California, I went to go sleep on my friend's floor, basically, at Stanford University while I found an apartment. This was around 2005. I was invited to a party, as you are often on college campuses, and there I met Jessica Jackley. She was in the Graduate School of Business at Stanford, and she told me about her idea, which is basically to start an online lending platform. And this online lending platform acts as a marketplace where you can browse for loans that people are requesting all around the world. We're up to about 60 countries right now, and 145 partners. You browse for these loans, and then you can, as an individual, anybody with $25 who finds Kiva's website can actually contribute to that person's loan. So all of these loans from many different lenders around the world are pooled together, and that person's loan is fulfilled. And then I can go briefly into the logistics of how that actually happens a little bit later. But continuing with my story, I went off to work at Google. I thought it was a cool idea, and then you'd continually hear about Kiva in the Wall Street Journal and New York Times as it was getting more and more popular and famous and winning awards. A couple years later, I got the chance to see Muhammad Yunus speak at the Google campus, which was amazing and very inspiring. And I started thinking back like how I could make my difference. Turns out around the same time, Kiva was launching a Kiva Fellows program. So Kiva, I haven't mentioned yet, but is a leader in innovation in microfinance. It was actually the first peer-to-peer lending platform of any kind, not just microfinance. So it's the first time that you could do a transaction online and actually give money from me to this person, and then they'd be responsible for paying me back through the website. It was the first of its kind. But another way that they have innovated is, if any of you have ever visited MFIs before and worked on the ground there, you'll notice that they need a lot of help in many, many ways. Systems, back-end systems is one that you mentioned I thought was really great. Our MFIs was terrible. Technology, most of the officers don't even know how to use a computer, for example, let alone their borrowers. So there's all kinds of complications. And the Kiva Fellows program is an attempt to bring outside expertise to Kiva's microfinance partners who distribute these loans. I was accepted to the Kiva Fellows program, and I went down to Costa Rica, and I worked on the ground with a local MFI in central Costa Rica. And I spent a lot of my time traveling around in a 4x4 truck through rainforest trails and pineapple fields, interviewing borrowers, collecting information, facilitating Kiva's mission of kind of connecting lenders and borrowers. It's a very complicated way in which you can get a borrower's story from someone back to the lender so they can hear about the progress of their loan. It's Kiva Fellows are one of the innovations which Kiva has lent. And then bringing outside expertise, obviously. So I helped them with technology platforms, advising them on, like, I don't know, doing really basic things like teaching the loan officers like how to use Kiva's website so they could upload loan information, for example. Beyond my story, I want to talk about a few things that Kiva is doing on the forefront of innovation in microfinance. So it seems to be the very sexy thing to talk about these days in microfinance is mobile payment platforms. And that's a really important it's a really important innovation for many, many reasons, which have been discussed and will be discussed later today. Primarily among them, because what I said before, it's often really hard to find these borrowers. And it's really expensive to find them and to go get them. Often the cost of gas, for example, to drive out 2 hours into the rainforest is more than you're collecting in loans, right? So eliminating that middleman and the requirement to have to go find that borrower through a mobile phone transaction is really important. One of the innovations Kiva is making in this area is their traditional model is to partner with microfinance institutions. The money that is collected on the website gets wire transferred to these MFIs. The MFIs do the logistics of the distribution, collecting stories, uploading loan remittances, and all these things. So Kiva has launched recently a beta program called Kiva Zip. And I'm curious, who here knows about Kiva Zip? I'll go a little, okay, cool, great. So I'll go a little bit into that. Kiva Zip is an attempt to eliminate a lot of the middlemen and reduce costs. There's actually three main goals we have. Expand access to capital for those who traditionally haven't been able to receive a loan because, for example, the bank didn't trust them. I think the project that you're doing is a really cool way, an important innovation there. Another goal is to reduce interest rates. So the professor's example was really important and true in that it's really expensive to service these loans, and one of the ways that MFIs are even able to service the loans is to keep really high interest rates. So Kiva is attempting these direct mobile payments in an attempt to reduce interest rates, and they're actually 0% interest rates. I'll explain a little bit more in questions and answers if you want to talk about how that happens. And then obviously to facilitate Kiva's mission of connecting borrowers and lenders. So because Kiva Zip allows you through mobile phones to send a direct payment to someone, there's an increased connection between that borrower and lender. We're testing as a portion of Kiva Zip, thank you, a way to do direct text message communications between borrower and lender, which is one of the ways that we can increase trust between those borrowers and lenders. This all works primarily because of the amazing marketplace that Kiva has set up over the years. And also because Kiva lenders tend to be traditionally much less risk averse than MFIs and banks. So over the year that Kiva Zip has been in beta testing, we've had almost 100 loans funded. We've been able to receive quite a few. It's a very small number, I understand, but you can understand this is a beta test. It's our very first foray into it. And we've received quite a few repayments already, and there's about a 99% repayment rate. Our partners are PayPal in the United States, so we have a bunch of borrowers in San Francisco right now, small businesses of all kinds. And then Kenya, we have a partner with M-Pesa. So challenges are obviously many. Technology government limitations. It's really complicated to open up bank accounts, for example, in Kenya. And that's even one of the easier places. That's been a big challenge. But we're overcoming those through things like the Kiva Fellows program and improving the technology on mobile phones. So we're building our own platform. And then the Kiva Fellows are a great way, for example, to keep accountability in the places that we have these programs. They actually go out and visit the borrowers. They do surveys. Kiva is a big participant in the Suresh surveys, if any of you are familiar with those. Kiva Fellows do a lot there. And it looks like my time is up, but I'm happy to answer more questions about this later.
Thank you.
Yeah.
So in view of the limitations of time, I'm going to relinquish my right to ask questions to the panel members and throw open the questions to the floor.
Thanks to everyone. Yeah, okay, really interesting panel discussion, and I actually have a question specifically for Kyle. Really interesting to see what EFL is doing, and I was just curious, so you said something like over 200 questions, and I'm just curious if you all are working on ways to kind of boil that down to something that could be delivered in a sort of faster way, ultimately to scale it.
Do we want to do more than one? So it's definitely something we're working on and have thought about. 2 points. So yes, we are trying very hard to limit it. We don't know what the effect of kind of the predictive power until we test it. And it's whether or not a bank wants to keep lending against a tool that's unproven. So try and find a partner that wants to do that. Secondly, a client taking a 40-minute test in Africa where there's no access to credit is not really that big of a deal, and none of our partners are that worried about it. Clients, it's horrible to say, but you can kind of treat your clients not that great. It's like, a 40-minute test to have a $30,000 loan, and the turnaround time on these loans is 3 days. They're unsecured. There's a lot of benefits there for this individual that, if they go to another bank, it's 6 months from now they'll get the loan, if they get the loan, and it's going to be securitized. So.
Hi, thanks to everyone. Insurance was mentioned by probably all of you, but I'd love for Simona to sort of finish the thought. You talked about mobile insurance, and if any of the rest of you want to also address the topic.
Sure. Thanks for asking the question. Opportunity International has created its own microinsurance subsidiary. It's called Microinsure. And we've been able to really develop a partnership with Tigo, the cell phone company in Africa. We initially started this partnership in Ghana. And really, the way cell phone insurance is working for us is we're able to provide life insurance to the cell phone customers through the already existing base of customers at Tigo. Tigo is using this as an incentive scheme for their clients. So basically, step number one in the process is that Tigo provides life insurance to clients and their family members up to certain levels depending on the usage of the service, the mobile phone service. And then step number two in the process, as clients become more familiar and they trust the product and they see the benefits of the product because tragedies happen in Africa, then they go and buy more insurance and expand it to additional family members, extended family, and so on and so forth. We sign up 200,000, 300,000 clients on a monthly basis. And that's how we reached the 3.7 million number in a relatively short period of time. And we're now expanding the partnership from Ghana to basically a Pan-Africa agreement. And we're also in conversations with another major mobile operator in Asia to do a similar business model. So that's been part of our Microinsure business strategy. And of course, we're interested in adding new products as health insurance becomes available, and it's really something that can be offered through this platform. That's really what we're after, because we feel that that's the product that has huge value, significant value for our clients.
Hi, so I have a question for Alberto and Laura. I'm from Oliver Wyman, so happy that you mentioned the report. So you have mentioned many times M-Pesa, and like my question is, M-Pesa has worked like really well, but I don't know what it needs like to be so successful in other places like Latin America. I don't know if it's because of the population density or the technology. Like, what would other countries need to be as successful as M-Pesa?
So I think there were certainly very concrete reasons why M-Pesa was successful. I think it was certainly very good execution, but I thought there were kind of ecosystem reasons, right? The fact that Safaricom had this important market share, and the fact that the demographic characteristics were so well identified. So this thing about send money home as the first product was really an enabler. That's my view. I guess what we keep saying, and I think we think this is gonna get a lot more attention going forward, is the fact that adoption is, or I guess the demand side issues, what is required from an end user perspective to actually adopt one of these services is something that requires more attention. We, from the provider side, we banks, we telcos, actually spend a lot of time and energy trying to fix the supply side issues, right? So everything around regulation, infrastructure, technology, operations, all of that is something that we spend a lot of time doing. But I think we should also be doing a lot more in terms of making sure that the products and services that are offered through these platforms are actually relevant in the context of that population, right? Their geography, their economic conditions, their everything that has to do with them. I think send money home will probably be probably be successful in Kenya, but I think there is a send money home for Brazil, for Mexico, and we just have to work with partners in the ecosystem to find it.
And I think that's really proven in terms of they tried to put, Vodafone tried to put M-Pesa the same way they did in Kenya and Tanzania. And in Tanzania, the demographics were different. They didn't have the type of internal remittance and urban-rural divide as they do in Kenya. So they had to go back and rebrand and remarket it. So it's really looking country by country.
Yeah. If I may give another experience, Fino in India, for example, is a technology platform which combines with extensive delivery channels. They have now about 47 million customers and about 30,000 transaction points. So they deliver, government cash transfer programs. You could book train tickets. All kinds of retail products are combined with loans and savings and so forth. So there are other models, in comparison to M-Pesa. Any further questions? There's a question in the back.
Can you expand a little bit on how are you managing a loan without interest rate? And the reason is because in Pakistan, there's a new company that has done that through organizing microfinance through their mosque and religious centers, so they don't have to pay for a space or anything. And so they've done this. They have 200,000 clients, but they're all based because in Muslim countries, interest rates are not really regarded as something that has to be done. So how is it that you're managing that? That I think is great.
Yeah, it's a good question. And I should just be very clear that this is a beta test, and so this is where we're starting at 0. Kiva is very fortunate in that we have a large group of donors that keep us running, so we are able to pay for our own operational costs through donations that are added on top of the loan. So if you make a loan on Kiva, you'll notice like small percentages you can optionally donate to Kiva. Also, I suppose the real thing is we're fronting some of the costs for M-Pesa, and PayPal gives us actually 0% remittance fees. So we're very fortunate to have a partnership with them. That's one way we keep costs down. And then just directly being able to have lenders lend through our site who are willing to lend for free is the biggest reason. So our lenders, we're clear to them, they're not expecting anything back when they make a loan. So that's a large, there's a couple of the reasons that we're able to do it at 0% right now.
So I have another question.
Sure.
One of the key things that all microfinancing institutions are is they want to be sustainable, so they don't have to get money for free. And so you are your model is fantastic, and I'm sure there are 500 million people who need loans. Mm-hmm. But if many people would do like that, how would you keep sustaining a model that is a little bit based on charity?
Sure. Yeah, that's another great example or a great question. So it is hard. It's very hard. It's probably not long term. The answer. In fact, when Matt and Jessica originally founded Kiva, their original idea was to allow lenders to collect interest. In fact, Prosper, which I think was started around the same time, tried to do that, and it turned out to just be economically very, very difficult from a legislative perspective. There's some laws that were passed which regulated peer-to-peer lending and made it very difficult. So Kiva changed their plans and have been going on this donation model for quite some time, and we've been very fortunate to do that. Our lenders are very generous. I don't know. I think one of the constant challenges you'll hear from everybody here that we need to overcome is government participation and collaboration, legislation to allow this kind of innovation, or just a benign benign ignorance or something? Benign neglect. I like that. Benign neglect is really nice. The internet, for example, has survived for a long time because of benign neglect, and is only now starting to be challenged. But yeah, I think that's a challenge we need to overcome, and it's partly government help, which will allow these kinds of things and to allow us to be self-sustainable. There are lots of other things that we're working on, but that's how it works right now.
We have to end here because we're running out of time. I'm sure you have questions for the panel members, which we can pursue over the break. So let's give them a hand.
Just to quickly thank our speakers, we want to give them a little thank you book.
Thank you. If I may, I just want to say something about material that I prepared for the presentation today, but because of the limited time, didn't get a chance to actually show you a video. And if you don't mind, maybe we run it over the break. I wanted to leave you with some of the visuals of the technologies that we've talked about and the clients that we're actually serving at Opportunity International. And this video is done in partnership with Credit Suisse, one of our most generous donors, who has been supporting our technology innovations. And maybe over the break, if you want to see some of these images.
Thank you.
Thank you.
Oh, thank you.
Thank you very much for having us.
Microfinance organizations around the world to improve microfinance institutions and expand access to financial services. With stronger management and more efficient operations, microfinance institutions are able to reach more people, especially in developing countries, more efficiently and effectively. In the case of partner organization Opportunity International, this means collaborating to advance their e-wallet strategy. Mobile banks and ATMs, cell phones and biometric devices are developed to deliver financial services to micro-entrepreneurs and their families. Small loans, a reliable place to save, and other financial products help micro-entrepreneurs like Helen build up a better livelihood for herself and her family.
Before Opportunity Bank provided me with a loan, I wasn't able to buy food and clothes for my children. But now, after receiving a loan from Opportunity and growing my business, I am able to provide food for my family 3 times a day and buy clothes for my children. But the most important thing is that I have somewhere safe to save my money. Before, I just spent my money after getting it. But now I can save it and use it at a time when I really need it. There is a loan officer from the bank who comes out to train us on how to use our loans in terms of building savings and money management. He explains to us that the money should not be used for consumption, but that instead it should be invested in the business. If we don't use it for consumption, it can help our business grow. The loan officer from Opportunity Bank is very perceptive and kind. If anyone in the group has problems paying back their loan, they explain their problem to the officer, and together they always find the best way to solve it. I never had any problems repaying my loan.
We have transport problems usually, especially that we are going into the rural areas. Some of the areas are about 90 kilometers from the main outlets.
There is no Opportunity branch in the rural village where Helen lives, and traveling to the branch takes time and would force Helen to close her business and leave her family. But instead, Opportunity Bank comes to her. Small mobile bank units and their staff travel many miles to far-out villages so that people like Helen can make regular deposits and withdrawals into their savings accounts and pay back their loans. The biometric scanners allow Helen to identify herself, even if she doesn't have identification papers. Ellen is running a business with scones. Her business is running well, and she is saving well. And Martha is running a business with second-hand clothes. She wants to expand her business so that she can provide for her 2 children better.
I come here every day from 8:30 to 5 o'clock, except on Sundays. I hope to grow my business soon. This is why I would like to have a larger loan. Cash Up account is the name of my savings account. The reason why I use a savings account is because I want to build a house and be able to pay school fees for my children. My mother lives in the capital Lilongwe. When I want to send her money, I use my phone to do the transaction from my account to my mother's account. And sometimes when I have to pay other bills, like for the water, I use my phone for the transaction too. Before, I used to have trouble transferring money to my mother's account. When I wanted to transfer the money and the bank was closed, I had to wait for the following day or whenever the bank would be open again. But now, with cell phone banking, I can transfer money to my mother's account even at night.
Before Opportunity built the branch that Martha uses at the market where she works, Martha also used the mobile banks. The same technologies used in rural areas are also put to good use in Opportunity's city branches, where business employees and micro-entrepreneurs are able to speed up their transactions and avoid long lines thanks to debit cards and ATMs.